Did you know that right now, while everyday investors are panic selling in a wave of fear, Wall Street's biggest giants are quietly scooping up millions of shares of one of the most controversial stocks on the market? Welcome back to Calvin Mateo, and welcome to the great NIO divergence. Today we're breaking down whether a massive breakout is finally coming for NIO stock, because while retail sentiment is currently drowning in frustration and doubt, a multi-million dollar institutional accumulation is happening right under our noses at the $4.50 support level. Over the next few minutes, we're going to expose exactly what the smart money knows that you don't. We'll uncover a hidden $760 million windfall sitting off the balance sheet, an AI chip unit that Morgan Stanley calls a visible call option, 3 of the smartest funds in the world loading the boat, and the exact trade setups you could use to play it. So the real question is this: are you positioned on the right side of this divergence, or are you about to be the last one to find out? If this kind of deep dive breakdown is what you came for, do me a quick favor and smash that like button and subscribe, because it genuinely helps the channel grow and takes you 2 seconds. Now let's get into it. But to understand why these institutions are buying, we first have to look at the anatomy of this setup. What we are looking at here is the absolute textbook definition of a mispriced asset. We have a massive paradox unfolding right in front of us. The stock is being pushed down toward its 52-week lows by sheer retail panic. Yet, the institutional data shows a surge in ownership up to nearly 49%. Think about that for a second. Why would the most sophisticated money managers on the planet be aggressively buying something that everyone else is desperately trying to escape? This divergence is being driven by upcoming catalysts, including an unpriced $760 million tech windfall and a highly predictable options market setup that practically guarantees we are about to see explosive volatility. And here's the kicker. While the headline numbers we'll review in a moment look somewhat concerning on the surface, there is one hidden off-balance sheet metric that changes absolutely everything. If we dig deeper into the actual numbers, the chart tells a story of intense pressure. Right now, NIO's technical chart looks undeniably heavy. The stock is hovering right around $4.62, having recently tested critical intraday lows near $4.47. It is suffocating below both of its major resistance levels, the 50-day moving average sitting near $5.16 and the 200-day moving average parked at $5.36. To the average retail trader staring at this screen, this looks like a stock desperately trying to avoid a catastrophic plunge back down to its 52-week low of $3.34. But could this heavy-looking chart actually be hiding the setup of the year? So, what is actually causing this relentless downward momentum? The sell-off is being driven by 2 very specific fears. First, the delivery miss. In the second quarter, NIO delivered 107,658 vehicles, missing their absolute guidance floor of 110,000 by just 2.1%. Second, the margin fears. NIO recently launched their new mass-market Envo L80, but reports of surprise online discounts sparked immediate retail panic. Investors are now terrified that this shift toward cheaper vehicles is going to severely dilute the company's incredibly strong 18.8% vehicle margins. On the surface, it sounds scary. But could these 2 fears really be enough to explain what the giants are doing behind the scenes? Because that's only half the story. While retail investors are frantically dumping their shares over short-term delivery noise, the big players are quietly loading the boat. Total institutional ownership has surged to a staggering 48.55%. And this isn't just passive index buying that happens automatically. This is aggressive, high conviction accumulation happening right at these current depressed support levels. The institutional reality is entirely, almost shockingly, disconnected from the retail panic. So who exactly are these players making such a bold bet? Let's look exactly at who is pulling the strings here. Pay very close attention to these 3 whales, because their moves tell you everything. Renaissance Technologies, one of the most ruthless and successful quant funds in the entire history of finance, just increased their NIO position by 70.2%. They added nearly 6 million shares, bringing their total to 14.45 million shares, worth over $87 million. Then we have BlackRock, the largest asset manager on the planet, who effectively doubled their stake to 10.72 million shares. And finally, UBS Asset Management, who increased their position by a mind-blowing 3,966%, buying over 5.18 million shares. This is not random. This is coordinated, massive institutional buying. So the question practically screams itself: why on earth are the smartest funds in the world buying a supposedly struggling EV stock? Why are the smartest funds in the world buying a struggling EV stock? It all comes down to a fundamental value disconnect. When a retail investor looks at NIO, they only see the tip of the iceberg: car deliveries, margin fears, and short-term noise. But when Wall Street looks at NIO, they see what's hidden underneath the waterline: a vertically integrated tech platform. Institutions are pricing in massive unpriced chip investments, AI silicon spin-offs, an enormous next-generation demand that the average trader is completely blindly ignoring. So what exactly are these hidden assets that could flip this entire narrative? Let's break them down, starting with a massive payday. Let's break down exactly what these hidden assets are, starting with a massive payday. Catalyst number one is the CXMT IPO Windfall. Now here's something almost nobody is talking about. NIO previously invested 158 million yuan, about $23 million, into a memory chip maker called Changshin Memory Technologies. Well, CXMT just went public on the STAR market in a blockbuster IPO, and the stock absolutely exploded, soaring 466% on its very first day of trading. This handed NIO an unpriced paper windfall of approximately 736 million yuan, or roughly $760 million. Let that sink in. That is pure, raw value sitting entirely off the balance sheet, and most retail investors don't even know it exists. But could there be even more hidden tech value buried in here? And the hidden tech value doesn't stop there. Catalyst number two is Genitech, NIO's in-house AI chip unit. They recently unveiled the NX9031 chip, and here's the jaw-dropping part. Just one of these chips matches the raw computing power of 4 industry-standard NVIDIA Orins. Just one. This single unit alone has an internal valuation of $763 million. In fact, Morgan Stanley literally calls this AI spin-off a visible call option that officially transitions NIO from a cash-burning automaker into a highly lucrative AI platform company. Think about how differently the market prices an automaker versus an AI powerhouse. But none of this matters if the core cars aren't selling, right? Now, none of this matters if we don't look at the core automotive demand to sustain them. The third catalyst is the ES9 flagship SUV. And ahead of its official launch, this single vehicle has already generated over 50,000 pre-orders. NIO is executing an incredibly aggressive pricing strategy here that successfully undercuts their premium competitors while still commanding a flagship presence. This massive pre-order backlog proves something crucial. Despite the short-term delivery miss in the second quarter, the underlying consumer demand for NIO's next-generation lineup is not just healthy, it is roaring. So if the demand is this strong and the hidden assets are this valuable, what is all of this actually worth? So, what is all this actually worth? Wall Street is finally starting to recognize a severe mispricing here. While the stock currently sits stranded in the mid $4 range, the analyst consensus price target is sitting heavily between $6.70 and $7.34. And it gets better. Goldman Sachs has explicitly slapped a buy rating on the stock with a $7 price target. Based on current trading levels, that represents a massive potential upside of 45 to 63% over the next 12 months. So the obvious question becomes, could the market really keep ignoring a gap this enormous for much longer? And if you think the upside is strictly fundamental, wait until you see the derivative data. Let's talk about the short interest, because this adds serious fuel to the fire. Currently, there are 128.28 million shares sold short, which makes up about 5.22% of the public float. And it would take those short sellers roughly 5.2 days of average trading volume just to cover their positions. Now, while this isn't the biggest short squeeze setup in the history of the market, it absolutely establishes moderate fuel for a rapid short covering rally the very second any of these hidden tech catalysts officially prices into the market. So imagine what happens when reality finally hits. But how do we time something like this? But to time this properly, we have to follow the options money. The options market is executing a textbook pin on this stock right now, and once you see it, you can't unsee it. Looking at the July 31st expiry, market makers have built a rock-solid floor with massive open interest on the $4.50 puts, representing over 6,000 contracts. On the ceiling, we have heavy overhead resistance with 7,641 contracts on the $5 calls and over 8,600 contracts stacked on the $5.50 calls. So what's the key insight here? Traders are betting huge money that NIO stays trapped in exactly this tight range through the end of the month. Which means, if you understand the mechanics, you can position accordingly. But how exactly do you turn all of this into a winning trade? Knowing all of this data, how exactly do we execute a winning trade? Alright, here is the exact execution playbook, and this is the part you'll want to pay attention to. If you are a short-term swing trader, you play the options pin before the August 1st delivery numbers drop. Your entry sits right off the put wall support between $4.50 and $4.62. Your target is to take profits at the call wall near $5 to $5.15, and you keep a tight stop loss at $4.35, just below the 52-week low, to protect yourself from a technical breakdown. Now, for a long-term setup, the logic is beautifully simple. You buy right alongside Renaissance and BlackRock. You dollar cost average anywhere below $4.80, and you hold patiently for that consensus target of $6.70 to $7.34, waiting for the AI licensing and the CXMT Windfall to fully price in. Which brings us to the ultimate conclusion for this entire stock. The final verdict is a massive, highly asymmetric buy. And here's why it's so compelling. The downside risk right now is heavily capped by both the massive institutional accumulation and that rock-solid options put wall support beneath the price. But the upside potential? It is absolutely immense. Driven by $760 million in unpriced chip windfalls, the Genentech AI silicon valuation, and Goldman Sachs' 63% upside target. The short-term delivery noise has quietly created a very rare, high-conviction entry point that the smartest money on Wall Street is already exploiting. The data here is crystal clear. Now, before we wrap up, I need to be completely upfront with you. Everything you've heard in this video is for educational and informational purposes only, and it is absolutely not financial advice. I am not a licensed financial advisor, and nothing here should be taken as a recommendation to buy or sell any security. The stock market carries real risk, and you can lose money. So please, always do your own thorough research and consult with a qualified financial professional before making any investment decision. Your money, your responsibility. With all of that said, I want to hear from you. If NIO truly does have this much hidden value stacked off its balance sheet, why do you think the market is still refusing to price it in, and how long can that possibly last? Drop your honest answer in the comments below, because I read them all and I genuinely love the discussion. If this breakdown gave you a fresh perspective on NIO, make sure you smash that like button, hit subscribe, and turn on the notification bell so you never miss the next deep dive. This has been Calvin Mateo. Stay sharp, stay curious, and I'll see you in the next one.